Good morning students, welcome back to the class 11 subject business study. As we are going with the chapter number 7 sources of business finance. In last video we have studied about equity shares, who are the equity shareholders, then we have seen the features of equity shares, then merits and demerits of equity shares. In today's video, we will be covering one more topic related to owner's fund. The owner's fund topic is preference share. We will study about preference shares, then I will give you an introduction of what is preference shares. Then I will go with the topic considered as features, then types, then merits and demerits. We will have 4 topics under this preference share. So let's begin with the topic one by one. Let's begin with the preference share. What is preference share? Preference share is an instrument which are being issued by the company to raise the funds from the market for a specific period of time, and this preference share has a fixed rate of dividend. Those who are having this preference share is considered as preference shareholder. Preference shareholder do not participate in the management decision except related to money which are being affected by the losses or profit. Now in this it is very much clear that they get repayment after the maturity period. Once the period is over, they get the money back along with the dividend. Your company can make dividend according to the need. For example, if company wants to give a dividend on regular 1 year, so they can do that. After 1 year, they pay the dividend to the preference shareholder, or they can give a lump sum amount of dividend after the maturity period gets over. It is depending upon the organization how they want to pay. So maximum time the organizations pay along with the lump sum amount, the dividend is been given to the preference shareholder. So I have written here preference shareholders enjoys 2 preferential rights over equity shareholder. Here preference shareholders get certain benefits over the equity shareholders. So let's begin with the first point, right to receive fixed rate of dividend. As we have studied about equity shareholder, here it is mentioned that preference shareholder gets a fixed rate of dividend whether the company makes losses or profit. But whereas we are talking about equity shareholder gets the dividend after all the payments are being made by the organization. If company makes profit, the equity shareholder gets the portion of that profit, either it will be high or low depending upon the profits earning. Whereas in preference share it is fixed, the dividends are fixed. Now I have written second point, right to receive repayment of capital. Whatever the investment has been done by the preference shareholder, he or she gets returned back their money after the specific period of time, or maturity period gets over, they receive the repayment of their capital. And then after, if company gets wind up, equity shareholder can get their funds. So here preference shareholders are having two benefits. You have to be careful with this. Right to receive fixed rate of dividend and right to receive repayment of capital. Repayment of capital means investment. Whatever they have invested in the company, they receive money back. So this is the brief concept which I have spoken to you related to preference share. Let's begin with the preference shares feature, then types, merits and demerits we will study in detail one by one. Let's begin with the concept features. In features, it has been said that first point, fixed rate of dividend. Here, preference shareholders get the fixed rate of dividend. The fixed rate of dividend can be 3% to 6%. If company makes profit or loss, it doesn't impact the preference shareholders dividend. It will be received from 3% to 6%. It is depending upon the organization how much the rate of dividend has to be making fixed for the preferred shareholders. Here, the normally the dividend is lower as compared to equity shareholder. Equity shareholder enjoys huge dividend if the company makes huge profits, but in this case the dividend is fixed. If organization makes huge profit, the preferred shareholders do not get benefit of that profit. They get only percentage of that amount which they have spent. Now, next point is repayment of capital. As I already mentioned you in the introduction part, that preferred shareholder gets money back after a specific period of time. The maturity period gets over, the amount has been given along with the dividend to them. Now, next point is no voting right. Whereas equity shareholder gets the right to vote or right to participate in management decisions, but I have already mentioned in introduction, preferred shareholder do not get any voting right facility except related to their money matter. Now, no charge against assets. As we have studied for equity also, the same concept has come over here, no charge against assets, because assets is the property of the organization. If company makes losses or company wants to refund their money as a preferred shareholder demand, but money doesn't have by the company, so they cannot give an asset to repayment. Ultimately, preferred shareholder do not take any assets in terms of money. This much are been features for you. I have gone with the 4 features over here. So you should be studying very carefully. Fixed rate of dividend is being given to preferred shareholder. Repayment of capital is being made after the maturity period gets over. No voting right has been provided to preferred shareholder. No charge against assets is being applied to preferred shareholder. Now, we are going to the types of preferred share. Here, you should be very careful with the word. First point is cumulative. Cumulative preferred share. I have not written the sentence preferred share. So, you should be assuming that preferred share is ahead with that cumulative or any sentence in this points. First point is cumulative preferred share. Cumulative preferred shares are the shares in which the dividend is being transferred to next year if the company is not able to pay in the current year. For example, as you have gone with the 10,000 rupees preferred share, out of that you get 6%. So 6% means 600. If company doesn't have a money of 600 as dividend to pay you, it can be transferred to next year and the amount will be added 600 along with another 600. If company has money, they will pay you 1200 for last year and current year. It is considered as cumulative preferred share. Now, what about non-cumulative preferred share? Non-cumulative preferred shares are the shares in which the current year amount or current year dividend is not being received by the preferred shareholder, then the amount will not be transferred to next year, but it will be a loss for preferred shareholder. We are into the third point, participating preferred share. What is participating preferred share? Participating preferred shares are the shares where shareholders have a right to take benefits on shares and they are been participating in the management decisions. These preferred shareholders gets the surplus dividend after taking participate in the decisions. Next part is non-participating. Non-participating shares are those shares which do not have a participation in profit sharing of equity shareholders. So here the 2 points are very much clearly said that the participation of preferred shares are the shares where they get benefits of surplus profit, where in non-participation it is not been possible to gain profits from the equity shares. Now, next go with the conversion of preference share. Conversion of preference shares means after specific period of time, it can be converted into debenture or equity share according to the need of organization. Now, non-convertible. Non-convertible means it cannot be converted to any other form, but they will have to get the money. That's it for the types. Now we are going with the merits and then we will go with the demerits. First merit is reasonable safety of return. We are talking about safety. So preference shareholders gives an assurance that the money which you have invested in the organization, it will not be diminished or it will not be in the form of loss. The money has to be paid to that particular preference shareholder for the investment along with the dividend. Here it is an advantage for a preference shareholder. The capital which they have invested, it would not be in the loss form. Now, no interference in management. Preference shareholders do not have any right to take a participation in management except participating. Trading on equity are those things which are been mentioned over here, that preference shareholders are getting fixed rate of dividend, but for making trade on equity, they give a huge profits to equity shareholder. Fourth point is no charge on assets, as I have mentioned on the features also. Here preference shareholder do not take over any assets if the payment is not been made by the company. Next part is repayment of amount. Now the repayment of principal amount is being given after a specific period of time. When the maturity period gets over, along with the dividend, the repayment of principal amount has been paid to the preference shareholder. Now we are going to the demerits. Demerits, we are having limited appeal, unreliable or low return, and no tax benefits. These 3 points can be understood very easily. Here, limited appeal means here preference shareholders is not being suitable for the adventurous investor who likes to take a risk, but they want a huge profit. As we have studied that if you take a huge risk, the benefits will be more. But here it has a disadvantage as an appeal that preference shareholders is not suitable for the adventurous shareholders or investors. Now, unreliable and low returns. Here it has been said that the preference shareholder is unreliable and low return of dividend is being provided. As I have mentioned that it can be 3 or 6. If company makes huge profit, the 3% is nothing for the preference shareholder. No tax benefits. Here preference shareholders do not get any tax benefits because it is been mentioned that the preference shareholders only and only get dividend, and the dividend has to have a certain tax. So in preference share we have studied the concept, what is preference share, then we have studied about features, then types, merits and demerits. If any problem occurs, just comment back, I'll sort out as soon as possible. But be careful with this. The owner's fund preference share is divided into features, types, merits and demerits. As we are studying on equity, we do not have that types, but in equity we have studied about features, merits and demerits. So hope so you would have understood that preference share very well. So in next lecture we will study about more owners fund. Now the concept will be smaller and smaller because the two topics which are being taught in last video and today's video were huge ones. So now we were going into retained earning. Retained earning will also have a certain features than merits and demerits, and then we will have more 3 topics related to owners fund. That's it for today. Thank you.